My name is Lâm Phạm, Market Outreach Officer at Vingroup, and I will be your host for today. So over the next 2 hours, we'll be exploring critical challenges and transformative opportunities shaping Vietnam's banking and consumer finance landscape. Today's discussion will delve into strategic decisions at the crossroad of growth and risk, the impact of digitalization, green finance, and evolving investment opportunities. And to kick off today's session, it is my pleasure to welcome Mr. Hiệu, CEO of Vingroup. Together with Mr. Thuân here, he is the co-founder and CEO of Vingroup and has built Vingroup now as a leading firm in financial data analytics, research, and credit ratings. He has led various market entry projects for foreign investors to successfully penetrate in Vietnam market based on our data-driven and local insight approach. And Mr. Hiệu, we look forward to hearing your welcoming remarks and setting the stage for our discussion today. So, Mr. Hiệu, now the floor is yours.
Thank you, Ms. Lam. Ladies and gentlemen, good afternoon and welcome. It's my great honor and privilege to welcome all of you to join this webinar organized by Vingroup. It is, as we enter into the new era of development, we think that, at what we do at Vingroup, our colleagues will be sharing with you the outlook of the banking and consumer finance sector as we enter the new era. And with our experience in supporting the market and the investor, we have done a lot of relevant work in this segment with lots of information and data. We would like, this event to be the opportunity for our colleagues to share with you our finding, our information, our insight on the banking and consumer finance sector. But we also would like to take into account not only the opportunity that the sector is facing, but also the challenges that the sector is facing, especially not only the domestic challenges, for example, on the performance of the real estate sector, but also international challenges on regional geopolitical tension with the onboarding of President-elect Trump, or what we call Trump 2.0. What would be the impact of Trump 2.0 on Vietnam economy, as well as on the banking and consumer finance sector? Because we believe that is quite an important factor for Vietnam economy. And this time of the year, as we enter the end of the year, I believe many of you are busy wrapping up this year, but also preparing for next year, 2025. So what to take into account and what should be the consideration that you need to take into consideration in preparing the business plan for next year, especially in terms of investment or potential consideration with the banking and consumer finance sector in Vietnam. So our colleagues will be sharing with you, what are the issues, what are the challenges facing the investment, facing different stakeholders when looking at the banking and consumer finance sector in Vietnam as is enter the new era of development. So once again, I would like to welcome and look forward to have a insightful discussion and sharing with you, and we believe our colleagues will be providing you with insightful, multi-dimensional views on this important banking and consumer sector in Vietnam. So once again, welcome, and hope we have a fruitful 2 hours event. Thank you.
So thank you very much, Mr. Hiệu, for setting the stage for insightful remarks. So now let's dive right into our first keynote session to provide us with a detailed perspective on Vietnam banking's crossroad, reinforce risk buffers, or pursue growth momentum. Presented to you by Ms. Oanh. Ms. Oanh is currently the head of financial service sector at Vingroup, bringing over 10 years of professional experience in the field. With her expertise and extensive background in these sectors, Ms. Oanh is well positioned to provide valuable insight into the critical aspect of Vietnam banking sectors today. So please welcome her on stage for our first keynote presentation of today.
Thank you, Ms. Lam. Good afternoon, everyone. Today we explore Vietnam's banking sector at crossroads, as introduced. So should bank prioritize reinforcing risk buffer or chasing growth momentum? And how can industry stakeholders like investors, creditors, and the banks themselves can navigate the challenges and the opportunities tied to capital raising to fund this growth? So let's start with the credit growth story. Why the headline figures show strong recovery, reaching 12.5% year to date by early December, and projected to reach 15% as targeted at the end of the year. However, a closer look reveals a concerning reliance on the real estate sector, and this dependent raised question about the overall health of the credit growth. Firstly, considering some numbers, credit growth remained very sluggish in the first half of the year and only accelerating alongside the warming real estate market. And the real estate contribution is substantial, 21% of the overall of the system-wide credit. And in the first 9 months, and this translating into around 60% of the overall credit growth. And this heavy reliance is a key takeaway. So looking further, we see an imbalance in the exposure. The credit growth, as you can see in the figure 2, directed to real estate developers dramatically outpaced the overall credit growth, tripling in 2023 and doubling year to date in 2024. So meanwhile, credit to home buyers saw only a modest growth by around 4.6% by the end of September. This highlights the challenge faced by the home buyer in in securing the financing options. So the concentration in credit in real estate, particularly to the real estate developers, expose banks to credit risks. Developers are grappling with rising leverage and liquidity constraint, a situation that I will address on the next slide. Next, please. Can you have next? Yeah. So as you can see on the screen, the substantial growth we observe significantly depends on the real estate sector, which increase the overall systematic risks. And let's explore some underlying indicators. So figure 3 show you the pre-sale to inventory ratio, which reveals a downward trend, particularly over the last few months, the last few quarters. This decline indicates weakening demand and the potential contribution of the unsold inventories among developers. A high ratio typically signifies healthy sales. However, the recent decrease points to challenging sales environment. And in the figure 4, you will see the debt to equity ratio to real estate developer is consistently stable. And this indicates that the debt has hardly increased. However, let's assess the debt to EBITDA ratio, which is the most important indicator here, crucial to evaluate the company's ability to service its debt obligation. So the sharp rise to 5 times in the past quarter of 2024 raised the concern. This suggests that it takes the real estate companies around over 5 years to fulfill its obligation. So based on our opinion, developers typically have loans around from 3 to 5 years. So the debt to EBITDA around this around 3 to 5 times is affordable, but because it's already exists the benchmark, so it's alarming. And in the figure 5, as we saw, we already exclude the Novaland as the wood case. If we include the Novaland case, the net debt to EBITDA ratio would raise to over 11 times, and it's very alarming. So let's look at another angles of the quality of the credit growth. So while the aggregate figures indicate positive trends, a detailed analysis of various credit segments will show you a more nuanced understanding of the underlying dynamics. So figure 6 illustrates the year-over-year of the corporate credit versus retail credit. Notice that the significant fluctuation in the corporate credit growth peaking in 2022 before slight decline. This shows the financial difficulties of the real estate, the corporates in accessing the credit. Meanwhile, for retail credit, it exhibit less volatility, but the growth trajectory, the growth is very modest. So this suggests the weak domestic credit demand, and this somehow reveal the consumer purchasing power. So let's also analyze the composition of the corporate credit in the figure 7. Why SME constitute for substantial, 85% of the Vietnamese enterprise number, and therefore is very critical indicators of the economic well-being. However, their loan growth hasn't kept that pace with that of the large corporation. So the year to date, with positive highlights the need for targeted strategy to stimulate the SME lending further. So the low level of the lending to retail, to SME, and even the consumer housing, as we saw before, coupled with the overall growth figures, suggest that a significant portion of credit are flowing to large corporations, particularly the real estate developer. And this concentration of credit pose risks. Credit risks to credit quality, to overall economic stability, which I will explain in the next slide. Now, I want to raise a question that can bank sustain growth with such high NPL and shrinking buffers? So having examined the imbalance in credit allocation before, let's now turn our attention to asset quality of the Vietnamese bank, a critical factor impacting the overall financial stability. So as you can see in figure 8, the NPL, the on-balance sheet reported NPL continuously rose, and it reached to 4.5% by the end of September. And the problematic credit ratio, considering the VAMC debt and the restructured loans, including the restructured loan in under Circular 02, so provided a broader measure. So it's also reached the peak to at least 7%, according to the SBV statistic reported to the National Assembly. And however, let's look at it's not the end of the story. Let's look at the provision buffer, or we also call the bad debt coverage ratio. It has been thinner and thinner. This suggests that while the NPLs keep rising, the buffer of the bank has been thinner and thinner, and this is a worrying figures. So the data suggests that the challenges for the Vietnamese banking sector, especially the coverage, the ability to absorb the potential NPLs. So, as you know, the NPLs have an inverse relationship with the CAR. And according to multiple international studies, suggests that 1% rise in NPLs correlated with approximately 0.3% decline in CAR, capital adequacy ratio. This is because higher NPLs, higher non-performing loan increase risk-weighted asset. So this require more extensive loan loss provision, as you know, and which reduce the profitability and hinders the improvement in capital adequacy ratio. So we believe that the State Bank of Vietnam and the government recognize this and understand this problem very well, and are developing a roadmap to raise capital and strengthen the CAR. So I will deep dive in the next slide. So as you can see in figure 10, the overall capital adequacy ratio of the Vietnamese bank on average reached around 12%, over 12%. This year. So why the upward trend remains, the ratio remains modest if we compare to the international banks, which are over 25%, or even the banks within the ASEAN, which are around 7%. So this particularly raised a concern, especially under the current economic situation, because the NPL are rising, while the capitalization of the bank remain very, very thin. So and figure 11 and figure 12 shows you some concerted effort of the Vietnamese bank to enhance the capital adequacy. So increasing the charter capital and issuing bonds to raise the tier 2 capital demonstrate a proactive approach to mitigate risks and meeting the regulatory requirement. And I think we can discuss more detail in the panel discussion for this. And for the information, the Vietnamese government dropped some regulation to help banks to increase the CAR. So in the figure 12. The figure 12 outlines
13.
13. The figure 13 outlines a planned increase in CAR threshold from 8% to 12% by 2033. This phase approach allows banks sufficient time to adjust the higher requirement, and the incremental increase in the target CAR for 2013, 2031, 32 demonstrate a gradual strengthening of the regulatory framework. And figure 14 show some implication for the banks. So for the bank reaction related to the cash dividend payout limits and the CAR and the capital conversion buffer compliance. So I think due to the limited time, we can discuss this more overall. Banks must increase the capital right now to fund the next growth. Okay. So the need for improved CAR, as discussed previously, direct impacts the profitability and the risk profile of the banks. So let's now consider the earnings quality, the income structure of Vietnamese banks, and assess how they are adjusting their strategy. So as you can see in the figure 15, so there are a period of time the banks managed to expand the non-interest income to reduce reliance on the credit income. But recently, due to some challenges in some important fee income segment, particularly the bancassurance. So the fee income, especially the bancassurance income, keep declining, which directly impact the non-interest income segment of the bank. So overall, it's like that the Vietnamese are going back to the credit-centric time. Yeah. So overall, it takes longer time for the Vietnamese bank to reach the international benchmark, which are 40% to 50% of the total operating income comes from the non-credit income. Okay. So so overall, I want to recap what I have explained to you. And especially the implication for the investor. So in terms of the risks, so do consider the asset qualities of the bank, the undercapitalization issue, and the thinner earnings quality, and regarding the growth driver and opportunities, we see that consumer, so the recovery will depend on the consumer demand, will depends on the real estate market, as I mentioned. And we have some new growth catalysts come from the dual transformation, which are the digital transformation and the green financing market, which will be addressed by my colleague, Ms. Chi, please.
So thank you very much, Ms. Wang, for that insightful presentation, analysis of the challenge and growth prospect in the Vietnam banking sector. And as we reflect on these opportunities and of course challenges, it is also important to consider how Vietnamese banks has been transforming with innovation and digital transformation to act as enablers in addressing the challenges and also the outlook for the sector in years to come. And now we will turn our focus to another critical aspect in shaping the future of banking, which is dual transformation through digital and green initiative. So the two key questions should be addressed in the keynote presentation are: what are the value is digital transformation truly delivering, and can the green finance become a cornerstone of sustainable banking? And to explore this pressing question, please welcome my colleagues and so my friends, Ms. Chi. And Ms. Chi is the lead analyst for the financial sector at Vingroup. She has been leading a number of assignments relating to assessing the digital transformation by Vietnamese banks and their going green agenda. So over to you, Ms. Chi.
Thanks, Lâm, for the warm introduction. And I do believe that digital transformation as well as green transformation are two really twin engines for sustainable growth in the banking sector. And actually, the banking sector is undergoing a profound transformation driven by two forces of digitalization and sustainability. And these dual transformations are not just reshaping the banking sector, but also they create compelling opportunities for the investor to innovate and the banks to grow. And looking at here, the numbers, as you can see that the total outstanding electricity loans have reached like about 1.2 quadrillion with like NPL of about 2.9%. I think this number is quite good, showing the good in terms of the credit growth and asset quality, in terms of the electric loan disbursement. And for the digital lending, it reached like about 36 trillion Vietnam dong with around like 500,000 customers in July only. And there are many opportunities that I can see from this transformation, like the enhanced efficiency to reduce the cost as well as improve the delivery services that I will elaborate on the next slide. And the second point is the new market potential due to the rising demand in terms of the electronic loans as well as the digital lendings in the banking industry. And the last point that I can see that in terms of the sustainability alignment between the digital strategies and the green growth, so that the banks can create synergies to have the long-term value. And looking at here, like looking at the progress Vietnam had made in terms of the green finance, I think it's promising, but there's still plenty of room for growth. But in terms of by this September in 2024, the outstanding green credit has reached like about 665 trillion Vietnam dong with over 7% of year-to-date growth, mainly for the green energy and the green agricultural projects. I think this shows the commitment from banks to the eco-friendly initiatives as well as environmental projects. Why have seen that green finance has grown already, but the current scale is still modest when we're considering how the credit dependent our economy is. And this will highlight the potential and urgency of the scaling up the green initiatives to hit the sustainability targets in the banking sector in Vietnam. And I don't mind wondering where the Vietnam digital is and how it could be the game changer for the banking. I think that from my point of view, when I make a lot of research on this sector, I think that Vietnam is currently in the stage 2 of the digital banking journey, transitioning towards fully online digital operations. At this stage, Vietnam only has digital banking services via online platforms and neobanks operating independently, but are still supported by large established financial institutions. And the question is here, like when the SBV will grant a license for a purely digital banks. I have reviewed quite a lot regulatories as well as discussion with banks representatives, also from IT providers, but I have to say that SBV is encouraging bankings to have the ability to own the digital banks. But I think that the time will be like 2030. However, I believe that the SBV will not grant the license for the new digital bank. Yeah. And from my point of view as well, and some leading banks in Vietnam has embracing like the stage 3 open banking as they use APIs to share the data and create like innovative partnership with the partners to launch innovative products to serve the customer. So here, for all the efforts that I have seen from the banks, is digital transformation really paying off? From the measurement of the operational efficiency, as we can see that there is a huge drop in terms of CAR, as from like 50 to 60% in 2019 to like about like 25 or 30% today. I think that's not really about the cutting down the people, the employees, but about the way that banks can earn more from the credit and fees in a shorter time, and by creating like a better customer experience and faster processes as well as streamlined procedures. Actually, I have discussed with lots of representatives from banks as well IT providers. I can see that in the next few years, the banks still increase their budget in terms of the digital transformation, like to some sectors like AI or machine learning, so they can enhance their customer satisfaction. And here, once again, the green finance market that I can see here is that there are lots of untapped potential. I have mentioned about the green credit has grown like quite impressive at an annual rate of over 20%, which I think far outpaced the overall credit growth rate of 50%. But here's the catch: the green credit only accounts for like 4.5% of the total credit, of like 15% in 2024. The target set by the SBV. So this indicates like a sustainable gap, a vast opportunity for the investor and creditor to tap into. And the SBP also, based the way with regulations under the Circular 17 in 2022, so that the banks are now mandated to manage their environmental risks in their lending processes. So I think this regulatory push signal a clear commitment of banks to align the Vietnam financial sector with the global green finance. And here, below, we shall also show the green bonds, so that the green bond, some of the deals in the green bond here have been like certified by Green Ratings. As you know, that the legal framework Vietnam is still working on it, a detailed green finance taxonomy, but the current framework is still like basic and in its early stage. But all the things I can see in the dual transformation, that they can have a lot of opportunities for both investor and creditors to tap into this market. So thanks, Lam.
Okay, thank you, Ms. Chi. And I think it's really fascinating for us and also the audience here to know your viewpoint on Vietnam's position in the digital transformation pathway, and to know of that innovation and sustainability can go hand in hand to build resilient institutions. And with this insight from to our beautiful presenter, now we have a clearer understanding of the key transformation trends shaping Vietnam's banking sector. So now that will be the end of the two of our keynote presentation. We will now transition into our panel discussion, where we will explore the key challenges and emerging opportunities in Vietnam banking sector. So the topic today will include the driver for banking outlook in 2025, regulatory development, and key consideration for investors, lenders, and partners when exploring relationship and having exposure with Vietnamese banks. And joining us on the sixth panel are Mr. Thuân Nguyen, and he is the CEO of Fin Ratings. So as his role as CEO of Fin Ratings, Mr. Thuân has extensively monitored and evaluated the Vietnam banking system, including conducting credit ratings for numerous private banks and related topics such as corporate bond market, real estate sector issue, and green bonds and loans. So this positions him as a trusted partner in the financial sector and capable of offering valuable perspective on the current state and future trajectory of Vietnam's banking sector. So we are very welcome to have you here. And also welcome back Ms. Oanh, Mr. Hiệp, and Ms. Chi to join our panel today. So for this first question, let's take a step back and look at a bigger picture. So the Vietnam banking sector is now at the crossroad of transformation as presented to you by Ms. Oanh and Ms. Chi. So with the evolving customer demands and economic headwinds. So I think I'm gonna have my first question for our two experts here, Mr. Thuân and Ms. Oanh. What do you guys think are the most pressing challenges confronting the banking sector today? So Mr. Thuân, do you mind starting first?
Okay, so thank you, Lam, and thanks the speaker. Interesting sharing. I have learned a lot. And greeting to all hundreds of audience. And I saw some of your friends and our clients and partners, our subscribers. So thanks again for making your time with us, and good to have some a kind of interaction with you in this afternoon. So the question for me, and I think that's the top of your concern about what's a pressing issue for the banking system right now. And our analysts here already pointed out, and I share the view. But before giving some more colors on that, I would like you to join me to have some appreciation for the regulators of Vietnamese banking. And because we talk a little bit more about the risks and the challenges, but I myself, over the past 5 or 10 years, I see a lot of positive development, of course. And especially if you look back 2 years ago, 3 years ago, we hard hit by the COVID, and everything was a nightmare. But the banking system very stable up to now. And the way the Central Bank of Vietnam, they handle the foreign currency risks, the way around with many other central banks in the world, some of you know better than us. And the way they handle with the non-performing loans and so on. So that's a lot of appreciation from us at the independent rating agency where I'm the CEO. And of course, a lot of challenges. And I agree with Oanh, a number of top 3 challenges and the pressing issue. Yes, number 1 is the asset quality. More specifically, it's about the non-performing loans. What you see on the reported from the bank's financial statement, consolidated is about 4.5%. But the actual or the more closer to the real one is something like 6 or 6.5 already, as the central bank they reported to the National Assembly. So, but and that's because of the issue mostly from the domestic, especially from the low consumption by the retail banking and from the small and medium enterprises. The increase in the real estate, or especially the residential developers from banking credits, that's a key driver. So the good thing is that it's have real estate developers surviving by now, but the not a good thing is about some increasing risk exposure for Vietnamese banking system. So from my view, yes, so we are in the bottoming out phase for the banking, and it's we need to watch and see whether the recovery of the real estate sector will be coming soon or not with the new era and with the new leader, with the new policy initiative, or you can see by the Vietnamese government. But the more important issue I would like to highlight, the pressing issue is undercapitalization. We have a lack of capital for the growth of the banking system. You know, the past few years and for many years, credit growth 2 digits, 20% and 15%, and next year and this year expectedly from our consensus is 15%, right? And next year could be another 15%. And the CAR ratio, the capital adequacy, is still very low, I have to say. Just a half of the regional bank. You can see in Thailand, not comparing to Singapore or anywhere else. So it's around 15 or 20%, 25%. So here only 12%. So how to deal with that situation? So that's number one, and that's the opportunities for some of you, especially the investor, equity investor or debt financing. So number one, many banks and almost all the banks, they need to issue the new share, the new capital injection. And number two, they need to issue the tier 2 capital. Specifically, it's a corporate bond, locally or internationally. And number three, of course, is a debt financing, just syndicated loans. So I see a lot of opportunities from that, from the pressing issue, but the opportunity for you, we can talk more about that later. But that's the number two. So the number two pressing issue is the capital raising. So they need to do that. And very good news recently for Vietnamese banking system, Vietcombank, the best, the top bank in Vietnam, one of the big four, already got approval, in principle, green light approval from the National Assembly to increase the capital. Because, you know, the state or the government tend to say no for the inject new capital for state-owned banks. But very good news. And from our view, especially from the rating perspective, very good for Vietcombank and very good for the whole banking system. And for the information, we believe it's not factual, okay? The other state-owned bank will follow soon. That should be the way out. Otherwise, the ownership of the government, Vietnamese government in the state-owned bank could be diluted. And I don't think that's what the government wanted for now. So they need to approve and inject more capital for the state-owned banks. And that's good for the banking system as a whole. And number three, I think the issue here is more for the private-owned banks, private joint stock banks. So they already have some roadmap for the compliance with the amended law on credit institution. But the key thing is cross, lending to the related parties and person. And the number two is a single borrower limit. So that's quite challenging for some banks. And I believe the private banks, they already have some plan and roadmap. But the deadline is coming soon this year and mid next year depending on the new regulation. So I think that's the concern from the investor and creditors, and it depends on which bank, private banks. So I believe you have some sense on that, and you can have a more detailed assessment. But remember, that's only for privately owned banks, not for state big four banks. So bear in mind. So that's the top three concerns. So in conclusion, number one is about the asset quality, especially from the real estate. And we can discuss later, but we do see some initial recovery of the residential real estate sector. That's the good news for Vietnam. We have been rating a number of project company, housing and so on, and licensing process doing quite well in the number of provinces. So that should be a good. And number two is capital raising, undercapitalization. All the banks, either state-owned bank or private banks, weak or small, weak to small, weak to strong, they all need to do the new fund raising, equity or debt or whatsoever. Of course, that's a challenge for Vietnamese bank, but the opportunity for many of you here joining us. And number three is about the compliance. So especially for the privately owned banks. And the bank, they have quite complicated shareholder structure and lending to related party companies, or over concentration in some sector or some related companies. So that's a key pressing concern for Vietnamese banks. Yeah, that's my answer.
Thank you very much for that. And I think I do speak for our audience here, that is investor or creditors. A lot of the pressing challenge here that they should take notice. And I think over to you, Ms. Oanh, being a financial head, financial service sector head at Vingroup. So you might have a lot of expertise and exposure within this segment. So I would love to hear more about how you think about this issue and these pressing challenges.
Well, Mr. Thun answer are so comprehensive already. I just want to illustrate the urgent need and also the opportunities to raise the capital. So let me share some insights from Vingroup, a recent stress test. Currently the banking sector boasts an owner equity of total around 84 billion US dollar, and the CAR is 12%. You already know, which allow to absorb the present NPL ratio of 4.5%. Approximately 27 billion US dollar. However, the critical concern come from the potential 2.5% discrepancy, the difference between the reported NPL ratio and the problematic NPL ratio. So our stress test show that should only 50% of increase from the potential NPL materialize, the equity would decrease to around to the corresponding numbers. And this will lowering the CAR by 1%. So our current CAR is 12%, and after the reduction, so this represent a manageable 1% CAR decrease. So, however, it signals some underlying vulnerable. If the NPL keep rising and the banks cannot increase the equity capital, so that it will be a big problem. And our stress test show that if the NPL ratio escalate to over 12%, so this substantially undercapitalize the banking system, and it will trigger a potential crisis. There are some potential case of SCB. Maybe I'm too worrying, but I don't want to expect another case like over 10
no
years
worries,
ago.
Wang. The new law, everyone, they introduced the early intervention mechanism for regulator to interfere in managing the bank before they come into the trouble. So that's number one. And number two, the Circular 02, the government has discussed about that. And we don't know the outcome, but we believe it will be extended. So it's a kind of forbearance, but we think it's good for, and that's a practice. And let's carry forward the problem to certain years in the future. And I usually say to our clients that Vietnamese banking system is like a young boy. They have some disease or some problem, but they can grow over the problem. And hopefully it will not be serious problem to come over.
I also agree. The economy now is different, and the health, financial health of the whole banking system is so different from 10 years ago.
Thank you so much for Mr. Thuan and Ms. Wang for sharing such informative information to all of us and our audience here. So I would like to turn to a more global stage, moving into as you know, the international political development continue to significantly influence our financial markets. And recently, there has been so much discussion surrounding the potential implication of the newly elected US President Donald Trump returning to the Oval Office. So on one hand, his infamous strong stance against China may present both opportunities and also challenges for Vietnam, given our position as a key alternative to the global supply chain. However, on the other hand, Vietnam's status as one of the key export partners of the US put us in a delicate spot in trade relations. So I think this issue raised some critical questions. So my first question here for our two experts, Mr. Thuan and Mr. Hieu, what do you think are the top key impacts or implications might the policy of US President Donald Trump during his second term have on? The first one is the Vietnamese economics as a whole, and secondly is especially more insights into our main topic today, which is the Vietnam monetary market and banking system. So I think for this, Mr. Hieu, do you mind sharing some of your thoughts first?
Yeah, thanks, Lam. I think, yes, Trump, President-elect Trump, or what we call Trump 2.0, is quite an important factor. Not only for Vietnam, but for the global economy as a whole. And with his slogan, Make America Great Again, and the way we interpret it, or at least myself, I interpret it, is that make America greater than China again. Mm-hmm. So in a way, why, Trump has been trying to target China, because China is such a powerful, country, economically, politically, and also in terms of military power. So in a way, President Trump would like to make America greater than China again. And he used tariff as a strategic tool to negotiate, also to achieve what he wants to achieve. And looking into more detail in terms of, let's say, the import and export between China and U.S. economy. Majority of the China export to America is on what we call B2B, like machinery, spare part. So it's for businesses in America. Why President Trump want what we call reshoring some of the job back to America? And what kind of job he want to bring back to America? It's not the job of making clothes or shoes, but the job of more high tech, more machinery. And that would affect China more than Vietnam. Also, statistically, in terms of the B2B export from Vietnam to China, to America, is about B2B is less than 40%, while China is about 75%. B2B, So majority of export from Vietnam to America is B2C. So that would be less affected by, the initiative or the attempt to reshoring the job from overseas back to America. So that's one thing. The other thing that we have been also, witnessing a strong flow of China investment into Vietnam in the recent year. And we have at Vingroup been, receiving and supporting also a number of Chinese investors looking for opportunity to migrate their factory and open new factory in Vietnam. So in a way, that would have, some positive effect to Vietnam economy in terms of FDI. And that also have good implication for some sector like industrial property. So that's one thing. The other thing is that according to a study by Harvard University, the amount of let's say product that is relabeled, originally from China, but now in Vietnam and export back to America is only 1.8%. So in absolute value, it's about less than $2 billion. So it's very insignificant. So we should not worry too much. Also, everyone agrees that, President-elect Trump is such, what we call predictably unpredictable. But we should not over worry. about the effect of Trump and from all the discussion that we have with our customer and our partner, we see more of the positive impact than the negative impact from President-elect Trump.
Thank you for that. So I do really appreciate some of your very intriguing and also very funny viewpoints on this. So Mr. Tuan, do you have any thoughts on my second part of the question? What are the impacts and implications on the Vietnam monetary market and banking system from your viewpoint as the CEO of FinRatings?
From the impact from...
Oh, I think the first one, just on the monetary market and financial market.
And with the Trump
with the
2.0.
Trump 2.0.
We're sitting in Hanoi and Vietnam and talking about what's happening in the world and Washington and Beijing. It's a very tough question. But before answering this question, I would like to say one thing. We don't know what's happening after the trade war, maybe the real war. So what we talk here is about a good thing and not so good thing for Vietnam, just more about the thought and maybe not coming into the truth. And no one can predict that, that's for sure, even the top expert of the world. But what one thing I can say for sure, and I tend to agree with Mr. here is about it's good for Vietnam economy as a whole. You know why? Because Vietnam, we look at the top 10 item, what Chinese or China exporting to US, and that's quite comparable with the top 10 item that's Vietnamese export to US. Of course, they tend to do with a more high valuated item. And let's assume when Trump administration, they put like 60%, or they are even winning like 100% or even more to Chinese imported products. And even if they put some tariff here, so in overall, even Vietnam was imposed with some tariff, it's still better off for Vietnam as a whole. But be careful. We need to look at some specific industry. Actually, we have a project team is looking at that. So depends. Let's say, for example, for seafood, we see that's more benefit because we don't rely on the raw material import from China for sure, right? But for garment and textile, it's very much rely on the raw material from China or elsewhere. So the risk of tariff, another tariff for Vietnam's source export to US. That should be the issue. But back to the question on the capital markets, on financial markets. Frankly, to many of you, we don't see good news because people tend to say, and I think the consensus is Trump tend to be pro-economic growth and not caring much about the green or sustainable and so on, even terminating the Paris Agreement on the climate change. So, and the pressure for the inflation. So the Fed fund rate I don't think it could be increasing back, but maybe not declining as what the market expected. And let's say 5% at the moment or 4.5% maybe in the next few weeks, I think. So it could be a big impact for the Vietnamese financial market, not only for the equity market, but for the banks specifically as well. Because we know many banks, from big banks to the small banks, they are all having a plan to issue the debt. And of course, many of them considering to issue the foreign currency debt from international markets. So if the Fed fund rate still around 5% with the explanatory money policy from Trump, we would think it's very tough for Vietnamese bank and in particular, and the corporate issuer as a whole to borrow from overseas. And not counting the public borrowing for the very mega project for the national railway system and so on. So I have to say, let's see, but I don't feel positive about this. And less, maybe the Vietnamese bank will focus on domestic funding.
Yeah, thank you for that. So I think similar to what Mr. Tuan say, it's very difficult for just 5 people in Hanoi to discuss something about the situation in Washington, D.C. and as such. And I think I do record some of the positive outlook and also some of the not so happy outlook on here. So we do think that it's important for us to be prepared and hope for the best. So I would like to move on to the next topic of this panel discussion, which will be focused more on the regulatory changes and sector consolidation. So with the regulatory changes reshaping the landscape and banks are adapting to new licensing requirements, M&A dynamics and consolidation trends. So looking ahead, one of the concerns for Vietnamese banks is the ongoing trend of lower net interest margins. So Ms. Oanh and Mr. Hill, I think this question will address to you too. How do you think the change will impact the Vietnamese banks and what are the implications for creditors and investors? So Mr. Hill, would you mind sharing some of your thoughts on this?
Well, I think the recent development in terms of the regulatory framework governing the banking sector in Vietnam is a very important and have a profound impact on the industry. So that would affect not only the operation of the bank, of the sector, the performance of the sector, but also affect the consideration for investor when they consider investing in this sector. And that effect would include the need to do more thorough due diligence. Also, the recent law on credit institution also require the bank need to be doing a better job in terms of complying with the regulation, especially in terms of shareholder, in terms of related party. So there's a lot there for the bank to comply with. That also means there's a challenge for not only for the bank, but also for the regulator to supervise, making sure that the bank follow the guideline and follow the regulation framework that already set forth. For investor, apart from things like legal DD, they also have to do a lot of market DD, commercial DD, due diligence. And we, in a way, at FinGroup have been supporting a number of initiatives by the investor in looking at the potential bank in Vietnam with the view to invest in. So in a way, as we look back, in 2024, not much happened, in terms of equity investment in the bank. Why? I think it's partly because of they were waiting for the new law. Now the law was passed, but now it's the implementation of the law. So I think we have been seeing many interests both from the bank side, and as Mr. Thon mentioned about the need to increase capital base. So they need to look for equity investor, apart from the debt investor. And there are many foreign investors have been looking for good opportunity in Vietnam, and we have been also able to support some of them. And we believe in the next year, like 2025 or 2026, there will be a few deals of equity investment by strategic investor in some of the Vietnamese banks, including big banks, tier 1, but also tier 2 bank, taking into account the development of the sector, taking into account the fact that the regulatory framework has become more enabling and more transparent for the bank to operate.
Oh, so I think despite some uncertainties, I should say the outlook for the banking sectors is quite very exciting. So I think that leads us to even broader question about the long-term value creation for banks. So Ms. Oanh, given this trend of lower net interest margins, especially for Vietnamese banks, what do you think would be the impact on their long-term valuation? Are others any way to offset these challenges?
Okay, so let me clarify something about net interest margin. Of course, recently we saw a reduce in net interest margin, but let's look at the net interest margin historically, even back to 2019 and throughout the COVID pandemic. There are some fluctuation period, but the Vietnamese NIM always stay over 3%. So which is quite good benchmark compared to the regional banks. So I think the how to say the reduction in NIM is because of many reasons, including that the banks, the State Bank of Vietnam and the Vietnamese bank managed to maintain a moderate interest rate environment to help companies, to help the individuals to recover from the COVID-19. And yes, and secondly, there are latching effects between the saving interest rate and the lending interest rate. And I believe that the impact is only the short term. So come back to the valuation. So in order to shed some light about the valuation, we show you here some M&A deal in the banking sector, in the Vietnamese banking sector over time. And you can see that actually the key foreign about transaction in the banking sector, the valuation is quite good. Yeah. And also foreigner are willing to pay high premiums compared to the public market to acquire the stake in the Vietnamese bank. And you know, one thing, the ROE, return on equity of the Vietnamese bank is on average around 17%, I think, and it's quite close to the regional benchmark. However, you know why the valuation of the Vietnamese bank remain lower? You know why? Because of the capital adequacy ratio of Vietnamese is low. So the adjusted valuation, reflect the situation. So Vietnamese banks have opportunity to offset the problem. One, improve the capitalization. Secondly, diversifying the income stream by expanding the fee income, not so reliant on the credit income, by some innovative financial product facilitated by the digital transformation. And there's some emerging solution about the ESG, about the particularly the green finance as well. Yeah, and and along with the economic recovery, there are many ways for the Vietnamese to offset the short-term situation. Yeah.
Thank you very much for your opinion.
You want to add something?
Okay, so let me put some color on what Wang just mentioned about the banking valuation. And if you look at around the media and many others analysts, the people tend to say, yes, Vietnamese banking, yes, very potential and very profitable. Is to me and to us is a questionable, especially if you look at the very thin owners capital and the low capital adequacy ratio. And if you want to compare 17% per year on return on equity for a Vietnamese bank with like a Thailand bank, not to Singaporean bank, you know, if they increase a little bit more capital, the return on equity should be much lower. So I would say 17% per year return on equity here for Vietnamese banking system could be technically equally like 10% or 12% for some regional bank. That's my view. Of course, for some different purpose, especially for buy-side equity analysts, or I don't know. But that should be the consider in that by its meaning.
Thank you very much. So I think we have talked enough about the challenge. So let's change the scenario a little bit to a more positive thing. So let's pivot to opportunities. So the dual transformation in banking that focus on digital and sustainable finance that create new avenues for growth and innovation as presented in the keynote 2 by Ms. Chi. So for example, Vietnamese banks are now leveraging the digital transformation to expand their customer access, regardless of whatever geography they have been. However, they also introduce some challenge in debt management and also fraud prevention. So I would like to have this question for you, Ms. Chi. What do you think are some of the best practice from both international markets with similarity to Vietnam and within the local context that the creditors can adopt and minimize this risk while still investing in digital transformation?
I think that, Vietnam also learned a lot from the global, the international, and based on our recent research, on the digital transformation in the banking sector, I can see that there are several key trends that the banks want to apply in the whole banking system to reduce or to minimize the risks. The first one, I could say that they want to apply the AI or the data analytics, as well as the big data and machine learning into the debt management. And some leading banks in terms of digital transformation, like Techcombank or MB Bank or DB Bank, are researching, and they will somehow apply the AI and predictive models to evaluate the credit risks as well as default probabilities, so that they can provide to the customers suitable products in terms of repayment patterns as well as personalized loan terms and loan amount, and therefore they can reduce the overdue accounts in terms of the credit. And the second point that you have said, like the fraud prevention, I think that most banks usually biometrics authentication to reduce such as facial recognition to reduce the fraud in terms of opening accounts or etc. And the advancement will offer a more secured and seamless procedure for the customer to use the products in the banking system. And then I also see a lot of from the government support, like the SBB has promote the advanced digital to the degree like 810, and also the circular 13 according to the anti-money laundering, so that I can see that they can help the banking system to reduce the fraud detection as well as encourage the widespread adoption in the banking.
Also, thank you very much for these valuable insights. And also still staying on the topic of digital transformation. So all banks nowadays are under increasingly pressure to innovate, and not only through just digitalization, but also to adopt more sustainable practice. So sustainability is no longer just a trend now, and it is actually becoming more central to the banking strategy. So this raises an important question. So Mr. Tuan, do you think this effort represent merely a compliant challenge, or do they really unlock a meaningful, for opportunities for equity investment and also debt investments?
Both, actually, from our perspective and our experience. Because for banks, we have been doing a lot of green bond verification and ESG evaluation. We just announced second party opinion about post-issuance for BIDV green bond with support from the World Bank to us. So let's give some view for banks. For going green or ESG, they have three pillars. For the banking operator themselves, it's not so difficult. Of course, they are doing with the support from consulting firm, Big Four, and so on. And some banks already issue ESG reports, so very good. And by nature, the operation of the banking is not so difficult, like the steel business or other business, other sector. So just a matter of they want to promote and that's the trend actually now. The more challenging is for lending side. It's very tough for bank to set the system to tracking whether they are really giving a loan that's qualified for green or sustainable or GSS, social bond. At the moment, the bank doing selected very easy things like lending to the woman own business, lending to the renewable energies, and the data we just reported to the investor and audience here. Easy thing. But the key challenge is they need to set up the system, green loan, and with some support from advisor. Or the most challenging is how to provide the training and systematic for the branches and for all the credit underwriting process. That's the key challenges. And we see some banks actually are talking with us and green tech partners to implement that. The third pillar is for financing, green bonds. So I think that's in between, and BIDV already the first mover in the green bonds, and the next is Techcombank. They are preparing for that, and Vietcombank the second, and the last is Techcombank. And we are working with few other banks, private banks, for debt financing green align with some international taxonomy or standard, despite the fact that Vietnam haven't issued the local taxonomy for credit or lending. Of course, State Bank of Vietnam, they have some regulation like Circular 17 for ESG loans. So that's the situation for Vietnamese bank. But I think that's the trend they need to do, especially for financing and for the lending.
So thank you for that. So still on the topic of opportunities, so let's now move on the investment landscape, in which I think would be of interest of many of our investors sitting today with us in the webinar. So with the Vietnam's banking sector evolving rapidly, and as you guys all say, there are significant opportunity for investors, but also very critical consideration for them to keep in mind. So my question remains, given the ongoing capital strengthening and consolidation among the banks in Vietnam, what opportunities exist for foreign investors and also creditors in Vietnamese banking sector? So Mr. Hiểu, could you share what are the opportunities and key considerations in doing deals with Vietnamese bank? And also Mr. Thuân, you feel free to chime in as well.
Well, thank you. Before answering to that question, let me add also some color to what she mentioned earlier about the digital transformation. I think one of the, let's say, application and also quite trendy these days is what we call, alternative banking, data-driven lending, and using things like credit scoring, and that is quite relevant to today's, webinar, but also that leveraging on our own experiences of doing credit scoring for banking, which really require three things. Number one is data. Okay, so data about the company, data about the borrower, not only financial data, but also non-financial data, and data from all possible sources, including alternative data. And now we have, quite a good regulatory framework, including the newly enacted law on data, which is passed last month by the Parliament of the National Assembly of Vietnam. So that's number one, data. Number two is methodology. We need to have the robust methodology in order to come up with a scoring using different, factor. And number three, apart from data and methodology, number three would be the adoption and acceptance of the market, meaning, the borrower and also the lender especially need to make use of the score or credit score, provided by some third party. And this is important in order to really transform the application of alternative lending in this context. But back to the question on the opportunity. Yes, there are lots of opportunity because we're not only talking about bank, but also the ecosystem, related to bank. So we already talked about the need to increase capital base. So therefore, opportunity for equity investors there. There are also lots of opportunity for a green investor or green bond fund, given the, let's say, rising of the green financing agenda in Vietnam. But apart from the bank itself, there are also a number of, let's say, the service providers supporting the bank, like digital transformation, and there's a vendor, data center. So that also means opportunity for investor. And, if they consider investing in this, what they need to take into consideration, I would like just to highlight a few things. Number one is they need to navigate the system here in Vietnam. And also they need to understand very well the regulatory framework and how the regulatory framework is going to be developed further in the future. So not only looking at the current regulatory framework, but also the trajectory of change in the future. And then they also need to see what would be the synergy between the investor and the investee once invested in. Because 1 + 1 is not 2. We expect 1 + 1 has to be greater than 2. It can be 3, 4, 5, or even greater than that to make the investment a good investment. So in the interest of time, I just want to highlight some of the key things that the investor need to take into consideration when looking at the opportunities, specific opportunities. Thank you.
So do you want to share any perspective on this? Or
yes. So yes, I would like to confirm, as I mentioned earlier, the opportunities is clear. Simple. Credit growth 2 digits. 15% per year, and deposit cannot go 10%. So they need to issue the equity or debt financing, syndicated loans, green bond, and just loans from institutional investor and especially the foreign investor. So that's clear. But how to execute the deals is a very challenging for investor, especially the creditor, because some of us, you may know, for equity investor, if you want to take like 5% or 12% in Vietnamese bank, you can have a big team, you can have a budget to doing the full due diligence. But if you just lending to the bank, they're not open for you to do the due diligence. That's for sure. So what are the alternatives? From our experience, so number one is about you look beyond what's reported in the public domain by the banks and their financial statement, especially the key exposure to the real estate and corporate bonds. Remember, corporate bond here, the default ratio very high, alarming, especially the real estate and renewable credits. And number two is compliance, as we already mentioned. So how the new regulation, especially on the single borrower limit, cross holder across lending to the related parties limits, and the roadmap for transparency, like disclosing even 1% shareholder, then it's disclosed. So and much more. So how the banks are dealing with that? So that should be the key concern, and I would suggest every investor or creditor should care about that. And lastly, I think the most important is about the strategy execution capabilities. Every bank, they wanted to say they to have the nationwide strategy, they have a retail digital transformation, but we need to look at the execution capabilities and especially the succession planning, because the first generation, I think they're going to retire soon, but the son and the daughter taking over. So that should be, if you have a long-term 5 or 10 years time horizon, that should be the key assessment. You need to meet her and meet him to see how they can execute that from his father or mother.
Okay, so thanks a lot for all of our panelists here to sharing your viewpoint and your perspective on different topics of today's panel discussion. And for the next part, I think to reciprocate some of the support that we have received from our audience, we have received a lot of number of intriguing questions for our attendees, both prior to and during the session. However, we do realize that we are under a bit of time limit. So I would like to select some of the key few questions to address. And I think some of our panelists would love to address these questions. So my first question is that as an investment fund looking to invest in Vietnamese banks, especially with interest in upgrading Vietnam stock market status, what are the key factors to evaluate when assessing a bank? And I think for this question, Mr. Hill and Mr. Thuân, do you mind sharing some of your opinion and your perspective on this?
Well, for Vingroup, we are serving hundreds of institutional investors, and some of you are the fund manager. And I understand you are looking for the opportunities from the possibility for Vietnamese equity market to be upgraded to the emerging markets. At the moment, you are frontier. And banking stocks is one of the top of the mind of many mutual fund and institutional investor. So the question is whether the banking stocks could be attractive or not, or what should be the key consideration, right? So as we mentioned already, I think the banking system here and banking sector, they are suffering some key issue, but I believe is bottoming out. If the real estate sector is confirmed to be recovering in coming month or half year, just we're thinking about half year's time, not few years. If it's taking few years more, like 3 or 5 years, I think that should be a nightmare for the banking system. And that's the key risk to watch. And that's why it depends on the bank. That's relating to the second, my observation. So you would look at some bank who have, of course, the foreign room ownership limits, okay, and upfronter. So if you are But having exposure in some bank, they already trading at a very high valuation, 3 or even 4 times a book to price to book. That should be not sure, it may be not a good pick, but let's look for some private bank or smaller bank, and they could be potentially for uprunner and with some reasonable valuation, and hope for the upgrade to the equity market. So that should be the fantastic, and the success should be very sweet indeed for the new investor wanted to have some exposure in a Vietnamese bank. But be careful in picking the right stock. You should talk to the brokers or advisor, or you can subscribe to our system. We have very details which bank is financial analysis and valuation and so on.
If I can add to that, for investor looking at the bank with the view to invest, I think apart from what already mentioned, I just want to highlight a couple of things. Number one is business model. All the banks in Vietnam somehow have this, some similar model. B2B, B2C, retail, commercial banking. But what would be the, let's say, strategy or business model of this particular bank, which is differentiated from other banks? And how that would lead to, let's say, the competitiveness of that particular bank that under concern or under consideration. So that's number one. Number two, we mentioned earlier about digital transformation, and lots of money already been injected into digital transformation by bank. But there seem to be some gaps between the technology that the bank deploying and the skill that the bank have with its human resources. So what I'm trying to say is that the technology of the bank, some of the bank are developing faster than the extent to which the human resource of the bank can absorb to maximize the value from such transformation. Otherwise, the bank would not be able to maximize the benefit and the return from such huge investment in digital transformation.
Thank you very much. So moving to the second question from our audience, which I think is a very important subject about compliance with banks. So why the financial institution report compliance with regulations? How can we actually evaluate the actual state of compliance? And are there any gaps between the reported compliance and the operational realities that might impact the investment?
Vietnam is an emerging market, and except the state-owned banks, big four banks, many private banks, they have very complicated shareholder structure. And complying with the new law is something, yes, is a concern for you and for many investors. So, of course, they are very smart. And if you look at what reported in financial statement or public papers, it's maybe not enough. So depends on your type of investment or the relationship. You can invest more on that, and you can talk to the lawyers. You can talk to the doing your own checking and due diligence, or you can talk with our people at Vingroup. You can help, especially look at the key areas like the ownership limits and shareholder structure. Lending to the real estate and the risky areas, exposure to the corporate bonds, and much more. So depends on your the type of the partnership or cooperation, just lending or equity investor. So you can have appropriate ways of doing the KYC or due diligence.
Thank you.
Do you want to add something?
Okay, so I think that would be the end of today's panel discussion. And thank you a lot to Mr. Thuân, Ms. Oanh, Mr. Hiệp, and Ms. Chi for addressing all these important questions, including the question from our audience. And thank you to our audience. We're grateful a lot for such thought-provoking queries. And our apologies if we couldn't address your specific question today. So please don't hesitate to follow up with us after the event.
Or maybe we open up for 1 or 2 questions for some interaction. Maybe better, if possible.
Okay.
Or any question from the chat?
Could you please speak?
So I think we do receive some question from the chat. So I think I'm gonna read this question from the chat now. So from your analysis and due diligence of Vietnamese banks, do you think we can trust the NPL figure reported by Vietnamese bank and the central bank, including the reported numbers of 4.5% or 6.9% NPL ratio? Should it be higher to 8 or maybe 10% in your view?
Got it.
Okay.
Yes and no.
Yeah.
Yes, what they reported, yes, that's something, the starting point, we need to rely on that. And no, because it depends on the definition. So because one of the key things for Vietnam, they have a lot of policy forbearance. So if you want to have the fairer estimation of NPL, we need to do some exercise or some work. So, but not the problem by the banks themselves, because they still comply with the regulation and accounting and reporting policy. So, and normally from our experience, when working with our clients, when looking at the bank, assessing a bank, we need to have an adjustment based on what they reported. We look at the key borrowers, we look at the key exposure, and we look at the restructuring loan, and so on, and we have a best guesstimate or estimate of the, in the best possible way to estimate the real NPL, and you can have some better negotiation or well-informed about situation. But remember, it's a normal practice here. It's not the something fraud or issue from Vietnamese bank. You want to add something?
Yeah, I want to add something. Yes, I agree that yes and no. Based on our experience in due diligence and pre-due diligence in some Vietnamese bank to help the investor for a go or no go decision, and even investor. Besides the NPL ratio, besides the loan loss coverage ratio, investor can look at different aspects. For example, for many years before some banks put under special control, we noticed some early warning. For example, the accrued interest ratio as a percentage of the asset, and we also look at the exposure to some very risky sector. And we looking at the structure in terms of the loan portfolio, and there are so many things before you can go to the data room of the bank, before you can talk to the bank's people. There are many things you can do in advance to check and to decide go or no go. Yeah, and we can have.
As we presented in the slide, so the central bank, Vietnamese central bank, they report to the National Assembly some gross NPL already. So it's very transparent. Just a matter of the investor and creditors, or you guys need to do some exercise. Depends on the banking situation before having a decision, making the decision on lending or investing or whatsoever when you have some exposure for the Vietnamese counterparts.
Mm-hmm.
There's
maybe pick one more.
Yeah,
I think very interesting question.
I think our panelists here are really kind of dying to answer all your questions. So the next question I think would be on the SCB debacle in 2022. So the foreign investors are very concerned about the corporate governance of all Vietnamese banks, from the political interference of the state-owned commercial bank lending decision to related party transaction in case of the most private sector banks, and maybe some of the mistreatment of strategic investors. So what are your views on these concerns? Do you think this is fair, or such corporate governance issue better or worse, actually, from your observations?
Better. If you look at the amended law on credit institution, learning lesson from SCB, and someone go to jail. The improvement in the corporate governance of Vietnamese bank already, introduced. Especially number one is a lot of new regulation about lending to the related parties. Number two is about who's a real owner. So they need to disclose even more from 1% shareholding in a private bank. And number three is a single borrower limit Used to be very generous, but now lower, lower, and lower. So they have a roadmap for that. And the most important, we saw in the new law, they introduced the early intervention mechanism for the regulator to step in. Even no need to wait until they get into the trouble like SCB. So that's the lesson learned. And I think with with that changes, and we see a more positive development for Vietnamese banking system. Of course, no one knows what the next few years will be another SCB, but we see the risk getting lower and lower. And at the moment, I'm not sure you know or not, except for the special control bank, there may be some weak banks, and publicly, the central bank, they keeping very close eye on them. And I hope there will be no bailout like SCB in the future and have an impact on the system as a whole. And hopefully we'll be restoring the confidence for investor, local and international.
Well, if I can add to that, I think the SCBK was a kind of wake-up call, for the entire system. And, in a way, the revised law on credit institution was the right, development. And I think, going back to the issue earlier about due diligence, I think one need to look beyond what is being presented, and you need to find out who is the ultimate beneficiary owner of the bank or of the borrower. So you need only not to look at the shareholder, but also shareholder of shareholder or shareholder of shareholder of shareholder. So you need to see who is ultimately behind this particular, let's say, transaction. To make sense of, and so that really what beyond the number and beyond what is being reported by the bank under consideration. So that I think would be very let's say important for investor.
Thank you. So even though I do say that it's just a question left, but I do want to ask you this, because following what you say about due diligence and KYC, so this question is actually from one of our audience. So could you share with us the most difficulties that Vingroup has faced when implementing due diligence and KYC?
Well, I think, all the due diligence work with any financial institution are very complicated. So one need to have a very thorough, methodology. But also you need to make sure that you need to have a plan that cover almost everything, and you need to look beyond the number, and you need to find, the ultimate beneficiary owner behind certain, or let's say, those segment or those company or borrower of the bank that, have a high, outstanding loan with the bank. So that is not always easy. Because not obvious from some of the report provided by the bank. So that requires lots of effort, but that also require you to have to be able to access to a huge database. And that's what the advantage of Vingroup, leveraging on our database of million company in Vietnam and also 200 million company globally. So that can help us to identify, let's say, related party to any parties or any banks or any borrower almost instantly. So that would be very challenging for other company in the market. So having the right resource, especially having access to the right database, the right information sources, would help you to look beyond the number and help you to make sense of the situation of the bank.
So thank you very much. And I don't think I will be taking more time away from our next part, which is the fireside chat. So thank you again, Mr. Hill and Ms. Chi, for engaging in the earlier panel discussions. So as we move on to the fireside chat, we will take a closer look at the Vietnam consumer finance market, which is a critical driver in the national financial ecosystem. So Ms. Oanh will first join me to share some of her insight on this. So as the consumer finance sector has been adapting to post-pandemic realities and there are signs of resurgence. So Ms. Oanh, do you think the market has entered a new growth cycle, or it is still navigating the recovery phase?
Yes, I believe that it has already entered a new cycle based on our latest statistic in terms of growth, in terms of asset quality. So let me address this by providing you some numbers. So here, as you can see in the figure on the left here, so throughout the COVID-19, the consumer finance sector saw a prolonged adjustment period. You know why? Because the target customer segment of the consumer finance sectors are the lower income, are the workers, are the ones who do not have stable income, but have high demand for credit. And because of the unfavorable economic situation throughout the COVID and post-COVID, the credit demand reduced substantially. And also the banks who provide the consumer finance, the fincos, have to tighten their lending practice. So, and also there are some negative event happens that make the credit growth subdue. However, recently, especially since the second half of the year, we saw some recovery signal. As you can see on the figure on the screen, in terms of the overall sector growth, the consumer finance, the consumer loans balance provided by commercial banks and finance company saw a positive growth, CQ double-digit growth, as you can see. Yes, of course, banks still lead the outstanding the volume and also the growth as well, because the bank's customer, they recover first than the finance company customer. And it takes longer time. And secondly, even in the finance company, we also saw some positive growth, although it's just the single digit. And way forward, by the end of this year, banks and finance company will provide extensive promotion and together with the recovering in individual income. So the market will see more clearer recovering signal. And in terms of the growth potential, I do see that Vietnam is a very potential market based on the modest penetration rate compared to the regional markets. For example, considering the outstanding consumer lending balance as percentage of GDP, so the it's just around 28% from Vietnam, while for regional country, in some other country, over 50%. And if we take out all the housing loan, all the consumer housing loan, and only a small ticket size loan, it's just over 10%. So there's huge room for growth. And we do see a recovering cycle, a new cycle.
So it's very promising to hear from your viewpoint about the positive outlook on the consumer finance market. So building on that, let's discuss what fueling this momentum. So from the demographic shifts to the technological advancement and regulatory changes, what do you see as the key driving factors for the next growth cycle of Vietnam's consumer finance sector?
Number one should be the domestic consumer demand, the purchasing powers. And we do see it's recovering, although it's slower. And when the spending demand increase, the credit growth will also increase. The second thing, I do believe that we need to untackle some current challenges to help the consumer finance sector, especially the finance company, is that the more detailed regulation in some area, for example, the data protection, for example, the debt collection practice, to help the company to comply better and to help the borrower improve the credit quality, to help the finance company lend more confidently. So this is number two. And number three, very important, is the digital, how they implement the digital solution alongside the customer journey. Personal lending, retail lending is all about speed. Yeah, and the key to success, the key factor to have the finance company to compete with the bank is all about the process, all about the streamline procedure. Yeah, and I do see some top finance company like Home Credit or FE Credit or M Credit, they have implemented the digital initiative for a long time. And now we also see younger guys already put a lot of money to create more easy and more easy product. But some behind the scene, they still can control the credit risk. For example, make the lending decision with the AI or automatic collection as well. Yeah.
Okay, so building on what you just said, the last 5 years has seen significant challenge in the market structure, with new players entering in, and as you say, existing ones keep innovating to stay ahead. So how has the competitive landscape of the market evolved over the past 5 years?
Okay, so first of all, it changed substantially. If you look at the pre-pandemic period, so 50% of the market is owned by FE Credit. Everyone knows about this. FE Credit is so big, and also the top five, like other company like Home Credit or some and 5 or 7 years ago, FE Credit is very, very small company. And now it's already the number 2 and number 3 and sometimes number 2. So in terms of the market share, it's changed a lot. And if you look at the pie chart about the market share by the end of September 2024, you will see that younger fincos are eroding the market share of the top company, and because they are the latecomer, they can do different ways. They can leverage the digital to create the innovative product. They can learn the lesson from the first comer. And in terms of if we look at another angle, previously the majority of the market is owned by bank. It's a subsidiary. Many finance company is
bank-backed
fincos. But nowadays we will see that actually there's a trend that the bank divest from the consumer finance arms to focus more on their core operation. Because of so many things, they have to address the underlying problem by themselves and focus on their core service. So now we will see the independent fincos lead the market. And the second reason is, the consumer finance market is the target of so many M&A deals. So with the participation of the foreign players, we now see a more dynamic, more diversified market than the concentrated one like before.
So from an investor point of view, this sector offers exciting possibilities. However, the key success factor is to really understand the market dynamic. So Mr. Tuan, do you mind sharing what are some of the most attractive investment opportunities for investors in the Vietnam consumer finance market today?
For investment in Finco? This is no more license. And we still have some company under restructuring. So firstly, for M&A and we don't see so many opportunities. And for equity, I think there are few equity investment opportunities. So, and for debt financing or loan to Finco, I think that's more opportunities. because we see a number of FinCo company have a plan to raise even corporate bond, and they need the funding. Of course, many they have a backup from their main shareholders, but they still need to diversify the funding sources. And back to the story of the consumer finance, because I myself I'm tracking this sector very closely, and we have some talk or some discussion with regulator, State Bank of Vietnam. Actually, we have been consulted for some policy formulation. Let me share some view. So first, very good. Over the past 3 years, the FinCo have some scandal from debt collection and so on. But and it's hit to the collection. People look at the NPL is soaring, very alarming. But the good signal now in the recent quarter, as Wang just showed it to everyone. So it's very good to see the NPL getting down, reported, of course, and some big player getting profit making back. So that's very good signal. So and if we look at the potential and the room, untapped room for Vietnamese unbanked consumers, we see we believe the FinCo or consumer finance will be stepping into the new cycle for growing, given the low penetration for by banks. But a lot of challenges Wang already mentioned, but I would like to highlight. Yes, the debt collection should be standardized, and I believe regulators and association is working on that. And number two, they need to compete with banks. People used to say, FinCo tend to tap on the unbanked population, but everyone knows a bank now, they are with their digital bank and digital transformation, they are tapping on that as well. So to be very open, FinCo need to compete with banks, no way. So that's why the strategy option for some of them and for growth should be, very depending on the model and look at the untapped segment and innovative way of winning the new customer. Because it is the person doing in this sector knowing very well, lending for this, giving the loan is easy, but how to manage the risk is a key issue for consumer lending, especially the payday loans are easy lending, but the matter of collection is critical. But again, the good thing is that Vietnam, we don't see the risk of applying the interest rate, the cap for pricing. So that's a good thing. It's not like some country else in the region you may see, like from Korea, from Japan, even from Thailand. So they put a cap on the maximum lending rate for the non-bank financial institution or even alternative lending. But Vietnam, we don't see the risk in the next at least 3 years, given the balance and the effort by the Vietnamese government and many stakeholders wanted to develop the financial inclusion to help the people and the lower mass to access to finance. So we think in the medium term, still a lot of room to play, especially in the context of the new cycle for non-bank financial institution like FinCo, and including the alternative lender as well.
So thank you very much. And I do think that I would like to spend the next few minutes to address some of the questions from our audience. And this question is actually coming from live. So the first question focuses on the critical area of the consumer finance market, which is microfinance for low-income and blue-collar segments. As digitalization accelerates and consumer behavior evolves, there's a growing concern about over-leverage and the credit quality deteriorations in these segments. So, Ms. Oanh, how do you see the consumer finance sector balancing the need for financial inclusion while still managing this risk?
Okay, so thank you for your question. Yes, I can understand the concern of the investor and other stakeholders regarding the consumer finance sector. So for the consumer finance sector, the biggest issue, of course, the asset quality of the borrower. And the good news we can see is if we look at the NPL ratio of the sector is going down. actually. So this is the good thing. And in terms of how to balance the financial inclusion and the risk management. So I saw, based on our experience in helping the FinCos to monitor the market, I saw the leading FinCo already apply many solutions, including customer analytics, including the early collection. Yeah. So in particular, the market now is very different from 5 to 7 years ago, when there are a lot of borrowers, and we can reach out to like a random borrower to offer the credit. But nowadays the situation is different. The competitive landscape is very competitive, and the regulatory environment is tightened. We cannot acquire the customer data randomly and without their consent. So now the FinCos has to invest a lot in customer analytics to make the lending decision, to choose the right person, even they are low income person. But they do invest in analyzing the customer portraits. In some leading FinCo, they even design 8 to 10 portraits of customer profile, and to analyze and to design some pre-decision lending decision. And secondly, now FinCos don't wait until the loans become overdue and send some guys on the field to collect the money. Now they do have some early collection before the loans become due. They have the debt reminder, they have AI chatbot to interact better with the customer, to have the customer to make the customer with better experience, and to help them feel more engaged, feel more responsibility to pay back the debt and get more offer from the companies. So this how the FinCos can balance between growth and risk management. Yeah.
So I do think on the trajectory of the regulatory environment changes. So looking to the future, there's significant interest on how the regulation might evolve. So will the regulation become more open and transparent and enabling the consumer finance company to, compete more effectively with banks?
Yes, the good news is yes. If we look at some regulatory trends recently, so I know that the government draft a circular about the merger and consolidation and transformation of credit institution, and one of the key trends is to allow allow the non-bank financial institution to transform their business. For example, if you can see in the slide, general license company can be transformed to special license company. General license company, finance company mean that the one can lend to both the individual and the corporates. And also the specialized finance company mean that financial leasing company and consumer finance company can supplement some types of activities to become the general one. So they can, although this is not official, but at least there are some first step. Yeah, I saw the signal from the government that to help the non-bank financial institution to compete better. Yeah, in the future. Yeah.
So I do think, unfortunately, we have reached the end of our panel, our fireside chat regarding the consumer finance landscape due to the time constraint. So thank you a lot, Mr. Thuan and Ms. Wang, for sharing your expertise on the consumer finance market. And it is clear that while challenge persists, significant growth opportunities are emerging for investors and stakeholders. So following what we have discussed earlier, one of the critical concerns that many investors face when entering the Vietnam banking and financial markets is to managing the compliance risk. And there's often a gap between what is reported in official disclosure and the operational realities on the ground. And therefore, for investors, particularly when entering Vietnam, relying solely on public information or standard reporting might not provide the full picture. So here at Vingroup, we recognize the complexities, and this is where our service can come to provide support. So on the slide here, you can see this is an example of the internet connection map on a platform FinPro. So here you can see the full relationship of Bank A by mapping relationship between subsidiaries and affiliates. For example, company B, C, D, and company E. So in case there are any cross ownership or shell entities, we will examine the entities to uncover their roles and identify potential compliance risks early. So our role here is to support our investor with insights that go beyond just survey level data. So this approach supports better risk management and foster transparency. And ultimately, we aim to not provide just data, but the context and also clarity that our investors need to navigate the Vietnam dynamic financial landscape. And moving next. So as you can see here, we do offer a comprehensive suite of service tailored to the need of the investor and creditors when operating in Vietnam. However, to give you a better understanding of what we do, I would like to share two examples. So the first one, the case study one, I would like to talk about the SCBX acquisition of Home Credit. So let's begin with the landmark M&A transaction back in 2023 with the Siam Commercial Bank acquired 100% of Home Credit Vietnam, which had the value of nearly $1 billion US. So Vingroup was engaged by SCBX to conduct in-depth market assessment and the target evaluation. So our role here is critical in helping the SCBX navigate the key aspect of this transaction, including the growth potential, the competitive landscape, and also the target market positioning. So this case exemplifies how Vingroup we go beyond just provide data, and we deliver actionable insight to empower our investors to confidently invest in Vietnam. So while the case of SCBX demonstrates our ability to support large-scale strategic acquisitions, I would like to shift the focus to the next case study in the deal support service to showcase our expertise with merger filing. So in the first 9 months of 2024, Vietnam has recorded a total of 199 M&A deals, in which Vingroup were directly involved in supporting around 10% of these transactions, and primarily through our merger filing service. So under the Vietnamese competition law, merger filings require a comprehensive technical report to assess the market concentration level before and after the transaction. So with the stricter regulatory oversight and the need for reliable data source, Vingroup, we have become a trusted partner for this process. So actually many of our clients and also partners, such as like law firms, rely on us on this expertise, and we can leverage our database and also market insights so we can provide independent reports that meet the standard of the regulatory compliance. So this example highlights how Vingroup operates more than just a service provider. So we position ourselves as a strategic partner to help our investor to confidently explore the Vietnamese dynamic market. So I think to express our appreciation to all the audience here and engaging with us. So I think I have received a special approval from our CEO to have a special discount for all our industry reports from this point onwards to the December 21st. So any information on that, I would like you can contact with us later. And ladies and gentlemen, this brings us to the end of today's webinar. And I hope you have found the discussion very insightful and inspiring. So I would like to send a heartfelt thank you to all of you guys to spend this Thursday afternoon with us. So I know this 3 hours is a lot, and we all know like during the end of the season, end of year is such a busy times, and we appreciate your support and also staying here with us through this journey. So I will
just let me have one on something, because due to the interest of time, I saw so many questions regarding the consumer finance market, which I cannot address because of the time limit. So please feel free to reach out to me. I can give you 20 minutes to answer all of your inquiry regarding the consumer finance market and your request about
Any banks.
Yeah,
Okay.
any banks or in any finance company to help you understand the market better.
After this event, we would love to be in discussion with you and engaging with our audience. So as to show our appreciation to your support. So I would like to welcome Mr. Hiệp again to do the closing remarks for today's webinar.
Well, thank you, Lam, and thank you everyone for being with us for the last couple of hours. I hope we have already covered a wide range of issues, landscape of the banking and consumer finance, the opportunity, the challenge facing the sector. We also look at issue not only domestically in Vietnam, but also international and regional issues that might affect Vietnam economy, including the banking and financial sector. We also look at issue like, what kind of, what need to be looked at when doing due diligence. Our college have already shared a lot of information and insight. What are the key issues that you need to pay attention to. Due to the time limit, we have not been able to address all the question, but on the question that already been sent to us, we will respond individually to you in due course. Please bear with us. Thank you for joining us, and look forward to maybe seeing you again in the near future in person. Thank you.
Thank you, team. Thank you,
Thank you.
MT.
Thank you, everyone.
Excellent job. Thank you, speaker.